According to my recent study, which in fact will take place last week, and I present a paper in the symposium that shows, in fact, a very strange result. And the study was about how thoroughly that's the say lending officer and or the credit analyst in Bahrain use the cash flow statement in their analysis before they let's say lend, or they use it in as a process of lending. As you know, or as most lender knows, especially those who are in the credit department, and most of let's say banking and finance student, and even accounting student knows that bankers, especially as I say, the loan officer and the credit analyst, use the financial statement or the financial report for their analysis to help them to decide whether to lend or not, as any other, let's say stakeholder. And they know that the shareholders usually they focus on the profitability or the profit side of the organization, where in fact in general lender or banks should in fact focus on the cash or cash flowability side of say or position of the say of their customers, okay, especially if they are corporate organization or business organization. Now, my result, in fact, shows extraordinary and strange result. Believe it or not, that's 90% of the loan officer and credit officers in Bahrain, they focus on the balance sheet and the profit and loss account or the income statement in their analysis. Okay, and they ignore the cash flow statement, whereas in fact, let me say that's 50% of the lenders. Okay, they they grasp the cash flow statement, and they say, or they write some or few notes, or maybe 3-4 lines that to show the credit committee they look at the let's say this statement, the very important statement, I call it, especially for this user, especially for the loan officer and the credit analysis. Now, when I compare it to my study to or previous study in the UK, I found that we can say 97% of the British lenders, in fact, they use the cash flow statement and they use it thoroughly. And by thoroughly, I mean that's, they deeply analyze the cash flow statement. Do you know why? Because lender are in fact lend money, and at the end of the day they are looking for their money plus, which is the principal plus the interest, to come back to them to make the profit. So this is the difference, okay, between how much they lend and how much they receive. It is part of their profit. And also remember that 70% of the commercial banks' assets are in the form of loans. So the say commercial banks, in addition to, let's say, 30% other services, which they generate a profit, as I said, yes, from, they even say the majority of their profit come from the lending, come from this loan asset. So that is to say, going back before I compare it to the Bahrain's banks, I say British banks or loan officer and credit analyst, they use the cash flow thoroughly, and as I say, 97% of them they use the cash cash flow statement, whereas 30% they are they call themselves, we are let's say security, or we what lenders, or for example they mortgage the let's say the asset of the borrowers, and then they give the loan. That's okay. But now in this day, we have to focus on the cash flow. We have to focus on it thoroughly. Now, as I said, you know that in general, as I mentioned it, that the banks accept deposit from customers, take this deposit, and they lend it back to the other customers. They give, for example, 4% to depositor, but they charge the borrowers 7% or 8%. The difference in this interest, it is their profit or part of their profit, as we call it. Now, again, we notice that, or I noticed in my study that the main problem with the Bahraini lenders is that consists of two. First of all, they are not well trained, not of using the cash flow only, or well, maybe some of them, or maybe most of them, they go let's say for courses, and they cover in their studies and their courses the cash flow statement, how they prepare it. But still, they are not well trained how to analyze it and how to use it. And when I say analyze it thoroughly, analyze it in the same way, or give it let's say potential as they give to the balance sheet or the income statement. Again, the reason is that because again, let me ask you this question: if the lender is not focused on the cash flow statement, who else should focus on? So the lender should be number one in the list from those who let's say who must focus on the cash flow statement. In this case, as I said, if they are not focused on the cash flow statement, how they will analyze the liquidity position of the borrowers, how they will analyze the solvency of the borrowers, how they analyze let's say the credibility of the of the borrower, even the profit or the quality of the earning. Believe it or not, this is from experience and from my individual experience, that so many businesses, they in fact generate continuous loss, but still they are in the market, still in the business. Do you know why? Because they have cash, or they have positive cash. Whereas the opposite is true. Many profitable companies, they close or they shut down because they don't have cash. So again, cash is the blood of the business. So without cash is the dynamo of the business. If a business have no cash, how they will continue the business? Don't tell me they will borrow money. But if they borrow money, they will what again? They will end with what? With cash flowability problem. And if they have cash flowability problem, who will lend them money? Therefore, the company will collapse and will close down. Now, I'm going to wait, and I'll take because in my study I take only 10. That is my samples of my population. I take 10 commercial banks. Okay, and in fact I sit with about 50 loan officer and credit analysts. Most of them, as I say, 90%, they are not use the cash flow thoroughly in their analysis. So they need to be trained. As I say, this is the main problem. Number two, those who are trained, I say, they are still, let's say, they cannot write let's say pages and pages and analysis and deep let's say analysis in on the cash flow statement. Do you know that cash flow statement, there are so many output we can generate from the cash flow statement. Cash flow is not let's say what is simply statement which shows the cash in and the cash out, whether directly method use or indirectly method use. But in fact, we can use even management accounting, we can use cost accounting using the cash flow statement. Okay, and that is, I'm going to show it in my paper. and how they use the cash flow in the surface or financial institution, how they use it in management accounting, how they use it in cost accounting beside the financial accounting. But as I said, number one in the list must be lender. Lender must use the cash flow thoroughly. Thank you very much.